Welcome to today's session and thanks for joining. In these live sessions, I demonstrate a technique for swing trading profitably in any market condition by taking only high probability and low risk 360 degrees trades. I am Sagar Nandi, regular trader using only one trading system, Q Systems. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. Q runs on Metastock and TradeStation platforms. Q charts instruments that often move the market. Dollar index, it is in a downtrend with lower high, lower low. Until this trendline resistance is broken, there is no reason for me to be bullish on dollar, and if that happens, it may put pressure on the market, though that inverse correlation is not working lately. Dollar index is continuing to remain bearish. The other market level instrument is highly correlated with market, and that correlation is always present. That is the Mega Cap Custom Index. In the last market recap, I showed that Mega Cap Custom Index had a trendline resistance here and said that if that resistance was broken, that would be a reason to look to buy Mega Cap stocks. Indeed, the resistance was broken this week and price rallied. Weekly is bullish in color and shape. Daily is also bullish in color and shape. Interestingly, the memory trend lines work beautifully once again, and if you recall my previous market recaps, when the market and also mega cap index came to those trendline supports, I bought at that time. I didn't buy on the hugely bullish day, neither did I buy when price was pulling back. After the trendline resistance was broken, one could buy some mega cap stocks. I did not buy, I was busy with QDive's migration to workspace. So I did not trade much this week. Now for me it is too late to buy mega cap custom index because the stop loss, which for me is below the recent swing low, will be far away. Having said that, I also noticed that the trendline breakout happened on this candle, which was also a gap up candle. Keeping that in mind, it is possible to put stop below the gap candles low, but even that will be too far from the current price for me to take a long trade now in this instrument, but it is certainly bullish and it is now again starting to outperform the market. In fact, this week it seems much of the market's move was driven by mega caps, which may not be a good thing if you want to trade in a bullish market that has broader breadth. This is not a market like that. Market breadth, let's look into that. Internal health check. Usually the market follows the internal health, not the other way around. Q total view, the broadest view of the market. When price was at extreme oversold condition, both in terms of 3-month new high low, thanks to Dr. Jeffrey Scott, after watching whose videos I started using this, and also the 3-month and also the percentage of stocks of 50-day moving average was extremely oversold, which is much rarer than the 3-month new high low oscillator. Both of them were extremely oversold. That was the time to start to buy, and that was the time when I mentioned that I was starting to buy. After that, it has gone up. This week we also had a very bullish accumulation day, and after that price went up. In fact, this week, if you kept an eye on the market, this was the day you could start to buy stocks, not at the close of Friday. For me, close of Friday would be too late. Let's look at this total view using weekly daily charts. Weekly bullish in color, bullish in shape. Daily bullish in color and shape, and it also broke out of the trendline resistance. However, again, this is far from recent swing low. One would probably buy on this day when, after making a higher low, price went up with a bullish shape candle. That was the time to look for strong fundamental stocks in strong industries with proper buy setup to buy. I will not buy now, but of course it is bullish. There is no reason to be short in this market. That will change, however, if next week price comes down, closes below the trendline resistance, that will create a false upside breakout. That will be a time to look to short with a target of the trendline support. Of course, I will not trade this instrument. It is not a tradable instrument. It is a broad market view. If the false upside breakout happens, then I may look to short weak fundamental stocks. But that is a big if. Currently, so far, we didn't see any bearish sign in the market or weakness in the market. But if we look more carefully, what is outperforming? Growth is outperforming. Growth versus value, growth is outperforming. And small cap versus large cap, small cap is tilting down. So small cap is underperforming, large cap is outperforming. In fact, mega cap is outperforming hugely. So this week's bullish move was largely driven by mega caps, which means the breadth was not so wide. That is a cause for concern, but still it is a bullish market. There is no other way to put it. This week, let's also look at NYSE and NASDAQ market breadth. Both NASDAQ and NYSE recovered after the percentage of stocks above 50-day moving average as well as 3-month new high low reached extremely oversold condition. Now both of them are up, both of them are bullish, both of them have created higher low and has gone up. Both Nasdaq and NYSE are bullish in terms of internal breadth. Market external view, this is how most people around the globe see the market. Start with SPY. Weekly bullish color, bullish shape, daily bullish color, bullish shape, but it is too far from the recent swing low. The time to buy would be on this bullish color candle in daily. That would be on Tuesday, not on Friday. Tuesday was the perfect day to buy using higher high, higher low, and the fact that the total view market breadth was also bullish. Notice once again that once jump thrust low, price extreme low was hit and the big move up 3 happened. Price eventually went up. Of course, this candle was unusually long candle. I did not buy, as I mentioned several times on that day, but this pattern, big move up 3 coming at jump thrust low, price extreme low, worked once again. One could buy right on this day, keeping that pattern also in mind. QQQ, a similar pattern, bullish in weekly, bullish in daily. Dia, you can see it is not as bullish in weekly daily. Weekly color has not turned bullish, it is neutral. Daily is also muted and it is inside a triangle pattern right in the middle of the triangle pattern. That is a no trading area. Direction will not be clear. Low risk opportunities will not be right in the middle of the triangle pattern. IWM, weekly daily is bullish here as well, but it is underperforming the market and last 3 days price has not gone up. That also shows that the strength is in QQQ, which is outperforming SPY, and then SPY. Both are hugely influenced by the mega caps. Dia and IWM are not. QH bucket analysis, again thanks to Dr. Jeffrey Scott, after watching whose videos I started using it, implementing it first and then using it, pinpoints reversal points with remarkable accuracy without a fail. With, I should say, without hardly a failure. Very profitable to use that signal to take reversal trades. Bucket analysis currently is saying that it is bullish. 69% of stocks are above mid Bollinger Band. The bar charts are also showing that, but it is not overbought. Though Friday's market was bearish. I'm using, by the way, Q dives, that is Q edge also on workspace. Q edge also shows the sector industry stock advanced decline breadth, which shows where the market came from, where it is now, and where it may go next. In terms of sector industry stock breadth, the long-term period is still bearish, 1 month period. 10-day period turned bullish this week. 5-day is bullish. Today is also bullish, but Friday is bearish. That is somewhat of a concern. Though the candle charts are quite bullish, the internal breadth was bearish on Friday, again showing that the index's rally was driven largely by the mega caps. If price comes down next week, weakness of Friday hints that it may happen, and if price comes down, we saw that it may create a false upside breakout at trendline resistance for some market level instruments. That may be the time to look to short and book profit in the longs. Technical breadth, we only profit by buying stocks going up or shorting stocks coming down. Therefore, technical analysis is very important for swing trading. Weekly technical breadth is bullish across the board in all the categories. Also, the bullish headwind is saying that the up move may continue, especially for stocks which were at a lower price level. And Friday's breadth is also bullish. No reason to be bearish from technical breadth perspective. Market level summary, the most important trading decision is whether and where to buy or short, or whether to stand aside. Based on my market analysis, it is bullish. There is no reason to be bearish, but it is a bit too late to buy now for me. The time to buy would be on Tuesday. If the market continues to be bullish, I will rather wait for a pullback, and if market turns bearish, that will give low risk shorting opportunities, but that is a big if. Currently it is bullish. Review of last week's trade ideas. I did not share any trade idea as such, but I did look at one stock last week. I think I used bottom up analysis, and the week prior to that I used top down analysis, if I remember correctly. All those three stocks were bullish in some way or other. Let's look at those three stocks. It's good to go back and review them. And these were the only three stocks I shared in the last 2 weeks, and both were in the market recap. I did not tweet about any stock. ACMR, a semiconductor stock, I shared 2 weeks ago, and the bullish idea was based on the trend line supports in weekly and daily. The trend line supports held and price went up at least somewhat. But now looking back, you see I shared the ideas 2 weeks ago. It worked quite well, and because it was a reversal trade bouncing from trendline support, the preferred instrument would be short put vertical, and that would work even better because of the delta as well as volatility moving in our favor. In that same market recap 2 weeks ago, I shared another healthcare stock, pharma stock, CPRX. Again, that was based on the trendline support in weekly, daily both. Two stocks in different industries but similar chart patterns. That also held the trend line support. It went up beautifully. A short put vertical trade would make a nice profit in last 2 weeks. And last week I shared one trade, but I'll not look at it right now. Let me show you something. Let's try to use, I have a few more minutes before 30 minutes is over. So let's show some ways of using QDives and then QGlobal QLE together based on workspace. Now not on icon anymore. Workspace has data limitation enforced. Apparently icon did not. So I am now more careful about retrieving data from Refinitiv Workforce. So let's see one of the ways in which we could look at the market. We could explore for QFinder. I already showed you QFinder. That is a very robust way to look at the market because we start by looking at the technical breadth, and then based on whether the breadth itself is bullish or bearish, we drill down. This visual technical breadth analysis I find quite helpful to decide my preferred market direction, preferred trading direction. But sometimes if you have already decided to take only long trades, then instead of running QFinder, which looks for both long as well as short trades, you could simply run the scan for all Q long setups. Furthermore, if you are comfortable taking only breakout trades, you could run the scan only for breakout. Same for bounce, sideways market, or trend following setups like flow and pullback. There are scans for each of those trade setups for the long direction and also for the short direction if you scroll down. And if you are comfortable taking all kinds of Q trades, all of them are low risk, then you could simply run the long setup or short setup based on your preferred trading direction. I think I ran them already, and this is the data. So I ran it on all liquid stocks. So this is what I am doing, is a bottom-up analysis again, but instead of starting from Finder, which I showed already in the last market recap, I'm starting from only long trade setups. I'm going to copy the data. I came to Vital. I want to check their fundamental scorecard first. So there are a number of stocks giving possible buy setups, but using 360 degrees approach, I'm not looking at their charts yet. And you can notice in Workspace, whenever I am opening the programs now, they are by default with off status. Streaming is off. That is because I want traders, including myself, to decide whether to use this default data mode or limited data mode. That is to save data usage. Why that is useful? Now market is closed, it is weekend. There is no reason to use default mode. I could use the limited mode because anyway real-time data is not going to come. By doing that, I am reducing the access to real-time data, and I'm making sure that the limit is not hit. So it starts with streaming off. If it is during market hours, I will keep it at default or no limit. Default is the preferred choice to start with, but now market is closed. I'm using limit and power it on. I already copied the data from Explorer. Here is the import from Explorer button. By the way, when I click power on another monitor, LSEG workspace is loading. I'm not able to drag it, but no problem. I'm going to click the import from Explorer. You can see here workspace add-on is loaded. There are 103 stocks in the Explorer result, and now Vital is retrieving data from Workspace. You can see at the top left corner, Workspace is online. It used to be icon earlier. I find Workspace is much faster, partly because Workspace architecture is supposed to be faster, and also partly because QDives had been entirely redeveloped. Let's look at these 103 stocks. Let's click one star, that is at least undervalued or high growth stocks. Look at their industry scorecard from QEdge. Look for only bullish or accelerating industries. Go back to the stocks of these industries only. I am left with only 34. So this is a bottom-up approach now using dives on Workspace, starting with about 2000 liquid stocks. I am left with only 34 stocks. Let's look at their technical setups now. These are the stocks. Let's look for breakouts. You could look for other trade setups also. And as in the last week's demonstration, let's look at momentum signals. Look for signals that are having breakout from squeeze. And I came here for a reason. One of the stocks that is appearing is the stock that I shared in the last market recap, that is ODP. In terms of momentum signals, it has Mobo breakout and Bongo coming from a squeeze. The stock was up 2% on Friday. And if I look at the Q trade setup, it has bullish flow and also a bullish breakout setup. It is at price extreme low. I found it in the last market recap also, and I showed it was a bottom fishing opportunity. Now will be a good time to look at its one-page scorecard using QVital. I am doing all this to also demonstrate how equally seamlessly Q dives on Workspace works, only that it works even faster now. Undervalued stock. Earnings growth is negative, but earnings growth is improving, and revenue growth is also improving. It is a profitable company. Earnings per share is positive in whichever way you look at it. It has a short squeeze potential. Let's look at this specific stocks industry scorecard now. See, I started with the entire list, and when I'm finalizing, I'm looking at a specific stock now. The industry other specialty retail is not only one of the strongest but also one of the most accelerating. Now will be a good time to look at the chart. Very different from SCMR and CPRX. Those were not so much of a bottom fishing opportunity, but this is, and notice the weekly now. Last week when I shared the idea, I mentioned weekly was already looking bullish because we had 3 bullish indecision at the low. That is a cluster that is always to be taken seriously. The candle colors had also turned bullish for 2 previous weeks, and it is remaining bullish color, bullish shape this week. The indecision cluster, which is bullish indecision cluster, has expanded by 1 more week. All that is happening at a very low price. In daily, it was inside a triangle pattern. It just broke out of the triangle pattern this Friday, though marginally, as you can see. It was at jump thrust low in weekly, which means it was also sold in daily at price extreme low, and the big move up 3 had come. That was also a reason for me to identify this stock last week. I'm continuing to remain bullish on ODP. This is still at a low risk buy point, whereas ACMR, CPRX already went up from their respective trendline supports. They are not at a low risk buy point anymore. Again, this is a bottom fishing opportunity. Only if you are comfortable taking those trades, you may consider this and look into it. I'll not look at new trading ideas today. You may try out the Q dives on Workspace. By the few tweets I shared on Q dives on Workspace, the last few tweaks you can see, this one and the previous one, etc. You may look at them if you are using Q dives on Workspace to make the best use of it. Thanks a lot for joining me today. I look forward to seeing you in my next webinar. Have a great weekend, and as I always say, as these live examples I'm quite confident shows, there is no reason not to do that. Trade profitably. Thank you.